I want to go on to the next one though, because I think this is one that, again, I'll self-confess, I've felt it, where it's like, it's better to wait until things settle down before I do anything. Like I found myself, and I hate admitting this, but I will, I'm going to wait until the RBA stops raising rates. I'm going to wait until the Ukraine thing works out. I'm going to wait until the supply chains, like I'm going to let these things settle before I do anything. It's better to wait. And I would have to say that is a lot of the consensus thinking overall. How do you feel about that, Goose?
I'm going to quote Warren Buffett on this. So Warren Buffett has a great, I caught a great snippet out of an article I read actually. It's not like one of his like quotes, I don't think. But markets don't settle down, they settle up. By the time the news looks a little bit better, the market has already recovered. And if you miss the recovery, there's a very, very good chance you're going to make it harder to hit your financial goals. That was a direct excerpt of an article, that an interview with Warren Buffett, which is awesome, right? Which is so true. Now, if you look at markets generally, like let's just take a suburb property market, right? So what you tend to see is there's typically kind of like four phases. There's four phases of growth in any market. There's the early adopters who get in when it's an emerging market, which is typically what we tend to do. And then you kind of got the early majority when people start hearing about it, but they're not, they're sort of proven and they can feel like, oh yeah, it's already a hotspot. And then it's kind of like, that's when it's becoming a hotspot. It's becoming like the consensus. Oh, that's a good place to invest. And then you have and then you kind of have the second and the third and fourth quarters, right? So the third quarter, people are still getting in at an okay time, right? But they're literally in the third quarter. If you think of there's 4 quarters in a growth cycle, they're literally getting in after half time. So they're only playing half the game for a start, right? Yep. Then there's the people who enter in the fourth quarter. They're usually the ones who lose money. But here's the thing, right? And I actually don't have the actual stats to back this up.
You just described my Bitcoin journey. So,
dude, same. Dude, totally, right? Totally. This is why I stick to what I know, real estate investing, right? But here's the thing, like it's not an even distribution of people. Like you have the smallest number of people get in the first quarter, the second smallest number of people get in the second quarter, the second biggest number of people get in the third quarter, but the significant majority, like over 50%, probably 75% of people get in the fourth quarter. Right. And so that's why you have a lot of people who aren't successful in real estate investing, which is it's a significant problem, right? So 99% of property investors never achieve their goals. You need, on average, about 5 properties in order to achieve whatever your financial metric is, right? Whether it be 80 grand or 150, whatever that is, but depending on your time horizon, you're going to need about 5 properties, unless you're going to wait 30 years. And 99% of property investors never get to 5 properties. In fact, 90% never get past 2. And there's a reason for that. It's because most people suck, right? And they get in at the wrong time. And let me rephrase that. Their decisions suck,
That's
right?
better. Yeah.
Their decision. The people there's nothing wrong with the people, but the choices they make are bad ones. And they get into markets too late, they get poor advice and all of that kind of stuff. And so this idea of waiting until things get better means you've already missed it. Like you've already missed the opportunity. So the people who can make the greatest gains are the ones who can think in decades, not days. The shorter your thinking cycle, right? The closer that you think about your decisions is directly correlated, in my opinion, to the success that you're going to have, right? Because if you're thinking, what am I going to do next week and next month strategically in my business or in my real estate portfolio, you're probably going to make a whole bunch of poor decisions versus what does this look like over 3, 5, 10 year kind of time horizon. That's where you can actually make the biggest gains. And again, going back to what we were saying earlier, back in COVID, I was freaking out as well, right? So now, to be clear, we made really data-centric, data-oriented and data-informed decisions around real estate investing, but I was melting down around heaps of other stuff. Like it was a freakishly hard time for a lot of people. But again, if I could go back, what would I do differently and how would I approach that differently? And what have I learned through the passage of time to be true? What I've learned from the passage of time to be true is that the entrepreneurs versus the business owners, right? So there's an interesting kind of distinction I read in a book the other day. The business owners kind of like see where the market is going. They look at what people are doing in a business model and they pick that business model and they go, great, I can kind of grow a little bit of that and get a piece of the pie. But entrepreneurs, the ones who really disrupt things, who really do things differently, they're the ones that have an asymmetrical return on their time, energy, effort, impact, right? They're the ones that make the unicorn companies, that do all of this kind of stuff. And there's obviously gradients of that. That's not an absolute binary kind of output. But I believe that in order to be successful, you have to be able to challenge the consensus thinking and make decisions based on facts and not fear.
Hey, fellow business owner, if this topic and value-packed short video has resonated with you at all, and you want to dive deeper into being a full stack business owner, check out the full episode by clicking the link on your screen or in the description right now.